Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, August 9th, 5:06 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend, certainly above or across our short and medium term indicators, meaning all five of the major indexes are trending above their short term 21-day exponential moving average and above their 50-day medium term moving average. Leaders acting well also. However, we are still below the long term trend of the 200-day moving average, which is rolled over and is lower. We had been rallying higher within 4 to 6% of it, depending on the index, but pulled back a bit over the last couple of days. And we're very well aware and have made everybody aware that when you're under the 200-day moving average, this is when risk is highest in the market. So we just don't get fully invested in an environment like this. We follow our short-term and our medium-term indicators to put some capital at work, but we're not going to go all in till we get back above this 200-day moving average. So what happened today? All day, value led growth from the opening bell to the closing bell. And growth led the market lower. Big disappointing action in growth stocks. You can see the G6 down 2.13%. Growth had been outperforming over the past about week and a half, so somewhat normal to give some of it back, but it doesn't make it sting any less when you're in growth stocks. And a big note, CPI will hit the wires. That's in consumer inflation, hits the wires before the open tomorrow. We'll be gauging the reaction to those numbers very closely. We put a hedge on over the last couple of days, expecting some volatility, and don't want to be out over our skis with the market. So the rest of the indexes, S&P 500 down 0.4%, Nasdaq 100 down 1.3%. Dow, the value leaning Dow, best day, down only 0.18%. Mid caps down 0.87%. Russell down 1.46%. Diversified Global 60/40 down 0.34%. GROTECTION down 0.76%. As I said, several of our growth stocks took it on the chin. A few of them we've only had 2% positions in, so not really hurt that much. But I want to extol the virtues again of why we like to have SSO as a big anchor in our portfolio. We'll talk about that when we get over to the tail of the tape. But first, let's get into a definition of why we do what we do here at Revere. Let me blow this up a little bit. So trend following is what we do, meaning when the market is trending higher above the three key moving averages, you can see over here, this black line is the long-term 200-day. This red line is the medium-term 50-day. This this green line is the 21-day exponential. When we're trending above it, and they're stacked in this order. This is exactly what you want to see in a healthy market, and we are at the maximum as far as having our capital diversified, as long as leading stocks are continuing to act well. When things roll over, for example, here they get below the short-term trend and poke their head a little bit below the 50-day. This means we're consolidating. We're going to pull back, get a little bit less involved in the market. But if we start rolling over, very similar here to what we did at the beginning of January, where we got below the 21-day, the short term, and then the moving average broke below the medium term, price broke below the 50-day, and then price comes down below the 200-day. This is where we really start gearing up our either all cash or way reduced in what we have in the market. 124, January 24th, this first close below the 200-day was the first time this year we went to all cash, and we spent quite a bit of time in all cash, as long as we've been under all three of these lines and trending lower. When we get back above some of these short-term moving averages and then the intermediate term, we start putting more capital to work, but always with an eye on an exit. We think about risk management, or how much we can lose, not how much we can make. When you're in a market that isn't fully bullish, you need to be concerned with your downside protection, and that's what we specialize here at Revere. The big change this year was on 421 here when we broke below the moving averages, tried to get back above in one day and failed miserably, and then just headed lower. And this was really a bad quarter for stocks, April, May, and June. Now we've been bouncing off the bottom in July, and we've been involved in the markets first as we got back above the 21, then back above the 50, and we're consolidating now this move off the lows, about 5% below the 200-day moving average. So we're a little bit more than half allocated into the market, but we dipped back below half allocated because we're waiting for the CPI data tomorrow. And depending on that reaction, we'll either put more or less money to work. This is kind of a key inflection point, data point that the market has been waiting for. We also have, I need to point this out, this is a stochastic indicator, and it's above 80 means it's overbought. Now you can trend above 80 for a while and there's nothing wrong, but when you roll over and get below 80, you can see here, this is it's indicative of what happens with price when you come off of overbought and roll over. So we're very cognizant of what's going on with that. Another reason not to be fully invested. So that's what we do at Revere. And if you are interested in an approach like this for managing your account, give us a shout. You can email me, dan@revereasset.com, phone 855-REAL-WEALTH. That's 855-732-5932. Special note to our TD Ameritrade clients. They, for whatever reason, haven't been able to explain it, but they re-enrolled a bunch of people in paper confirmations and statements, and it's driving a lot of people nuts. We apologize on their behalf, but if you want to go back to paperless, give us a call, 855-732-5932, or email Miral, that's MIRAL, at revereasset.com, and she will help get you back to not killing trees. So there's your S&P 500. Let's take a look at the Nasdaq 100. You can see here, same stochastic rollover, and really what we've been doing is playing this bounce off of the lows. We're consolidating in here, tried to break out above this area. Let me go to this 15-minute chart here, and let me get rid of stochastics here as they've served their purpose. So here is where we broke above this bear flag and then pulled back into it over the last couple of days. So let's go to the tail of the tape, and I want to try to tie these two together. So starting off, nothing's changed from the higher level as far as what the headwinds, sentiment, or anything like that is, but one thing I needed to watch, my expectation coming into today, was the bull flag breakout holds on any pullback. It held yesterday, but after today, we're back inside this range. So that's what makes tomorrow's CPI report so critical. We either need to get back above the highs of today to get back above this flag and make this breakout back to be valid again, or on the other hand, if we break down below today's lows and the lows of last week's, then the breakout is a clear failure and we're going to get significantly more defensive. Let me play that out on the S&P 500 here. This is a little more choppy, but basically here was the breakout. We got back into it for one day, tried to break out again. Here's the flag, breakout, back inside of it. And very key again, we want to get back above 4150. Or if we go below 4,000, we've got a problem. 4,000, yeah, which is about this area right here. 4090 if you want to take it a little bit lower, but we're back inside this bull flag. So the bull flag breakout for right now has failed, but CPI will probably be the make or break for what the next move is on this market. Some news before the open today. Micron guided lower. This is the second time in 6 weeks. They're a big data storage maker, very tied to PCs and semiconductors. They guided lower for the second time in 6 weeks. They guided down at earnings. They guided down again this morning, and they cut capital expenditure spending. This hit the semiconductor index very hard. Let's take a look at SOX. You can see the gap down headed lower, a little bit of a bounce into the close, but we did go below the 21-day moving average. Now, when you think about it, where we are on our indexes, semiconductors are a big part of the Nasdaq 100, also a big part of tech, which is a big part of the S&P. Breaking below the 21-day moving average is certainly a fly in the ointment, because you want the semiconductors to be acting the same way as the major indexes are, and for now they're not. We've got an alert set back above the 21. If we get back above it, we also want to know if they go below it, so I'm going to set an alert there also, and this will give us some indication as to what's going on with a big segment of the market, as if we don't watch it close enough anyway. So not good there. Value-led growth all day today. I did talk about how we got hit a little bit with that. Something I added to the tail of the tape, every once in a while I want to be very cognizant of not letting my emotions get a hold of me, and I wanted to make sure I was patient taking a profit with this SQQQ position that we have, because we do have 10 longs. We have 20% in SSO. The Stochastic and the NASI are overbought. So those are kind of additional shorter-term technical headwinds that we need to be cognizant about. And if we're really going to break lower on SQQQ, I want that as on the indexes, I want to hold on to that hedge, as that will, while we work our way out of some of the long positions as our stops are hit, this SQQQ will go higher if the indexes are going lower. So let's finish off looking at the indexes. Here's the Dow Jones Industrial Average. Failed breakout yesterday from the bull flag, back inside of it right there. Mid caps MDY have been showing some leadership. Failed breakout again yesterday, back inside the bull flag. IWM, small caps, big breakout yesterday. Failure not quite as bad though, still holding the ADMA, and for the most part, we didn't have a flag. We had a continued move higher in IWM, and that was really fueled really by market cap. But IWO did a great job carrying the water, and that's one of the reasons why we've been getting more aggressive, is the relative strength in IWO, which is really one of the most important components of our G6 index. So that's a look at the indexes. Let's take a look here at what we were watching coming into today. From a support and resistance standpoint, this 4120 to 4130 had been holding any pullbacks, got back inside of it today, in fact closed at 4122, so between 4120 and 4130, back inside that area, which also corresponds to being inside that bull flag I've been talking about. Nasdaq 100, big level here, 315.59. It's a key Fibonacci level. It's also part of this, the 100-day moving average and the 8 are basically in the same spot right now, and we want to make sure that we hold above that. Intraday, we did dip below 3 times below this 315.59. Take a look at this on a 5-minute chart. And every time we tried to dip below 315.59, we bounced off of it. 1, 2, 3, 4 times. You could argue 5 times we approached that and ended up back above it. So that continues to be strong support. But as you know, every time you pound on support, it gets a little bit weaker. So this 315.59 level is going to be very clear. If we didn't have CPI tomorrow, I probably would have taken off part of that SQQQ as the support area held 315.59, but wanted to be patient with it, is one of the emotions I wanted to be cognizant of going into today. So I wanted to say why, how we combat getting too aggressively involved in growth stocks, and then when they all go down in a single day, we don't our portfolio doesn't take a beating. Down 0.76 today. Our 20% SSO position we would have been down 1.76% if that 20% were in growth stocks, because today, and this happens frequently, and this is one of the biggest problems that growth investors face, is they panic when they get a bunch of down days. But really, these down days are frequently just a full ATR in the individual position that they're holding. But when it's to the downside and it's all at once, it hurts. The MU Micron news hit ON Semiconductor today, down 6.3% on the day. It bounced at the 21. We took a third of our position off today as we went negative on it. Lost 0.1% of the total portfolio on it, and then the 21 held, so we're still holding 2/3 of our position, but we're now slightly underwater on it. Notice that the low of this gap down earnings day, which is the day that we bought, we undercut that and reclaimed it. Bunch of stops hit when they went below that. Bunch more stops hit when we went below the 21. This is why you got to be careful where you place your stops and with your position sizing. But for now, we're okay as that bounced on the 21. So ON Semi, one of those big growth stocks that we own that got hit hard today. Celsius, we were trying to get a little bit of profit built into earnings. Didn't work with this. We were negative going into earnings. We had to take some off, but I'm noticing after hours, really not trading a lot. I mentioned yesterday that this is mostly de-risked. This 96.10 isn't really valid. There's a dollar spread after hours, and somebody paid up for it, but it's still up about 1.5%. 95 is the bid right now. So now that earnings are passed, we can look at a situation as to whether or not we can get in it and just let the price do its job, not have to worry about earnings or anything like that. But the numbers were very good for Celsius, but you can't take that risk with not having a positive cushion going into after hours. So we got a hit on that today. I also SI. We still have some nice profits on this, but down 4.18%. Did bounce off the 8 EMA. Net, which we bought, we're negative on. Down 2.78%, was down as much as 5%, but that's still looking fine. Lighter volume pullback after a big volume gap up on earnings, so not concerned about that. But the bottom line is we like to smooth out these individual days, and SSO does that. And how does it do it? Because all rotation between sectors and between value and growth takes place within the S&P 500. So money's coming out of tech, XLC, XLK, XLY. It's flowing into other sectors within the S&P 500. In this case, financials were up, utilities were up, and real estate was up. So SSO provides 2 times the return of the S&P 500, and it handles a lot of sector rotation between growth and value and between the different types of sectors. Just because something is tech doesn't mean there's not value within tech or there's not growth within utilities. There are different PEs and there are different classifications for some of the stocks inside this, but all the rotation that takes place in the market takes place within the S&P 500, and this is why I'm such a big proponent of the SSO, which can help smooth your portfolio out on days like today. So portfolio changes today. I mentioned how we trimmed ON, a third of it. We sold our Celsius going into earnings. We did make a buy today, SWAV. This is a stock that was on the 21 over 21 list and had a great reaction to earnings, although a little bit of a strange one. Up 17% on 239% average volume. Volume was just absolutely bone dry after hours last night and pre-market today, and then once the market opened, it just took off. This happens a lot with stocks. It's kind of rare. It's more likely to happen in non-tech stocks, and this is a medical stock, but let's take a look at the 5-minute chart with this, and after it opened, it just took off to the upside. When we pulled back here, we got in around 260 and we just went sideways the rest of the day there. But we've got a position established in Shockwave now near all-time highs. Let's go to a weekly chart. So if it continues this, did it close at all-time highs? The high here was 249. So yeah, all-time high close. Good stuff here from Shockwave, another leader, great fundamentals, 116% sales growth, huge earnings growth, 68% versus losing money this time last year for this quarter. You can see the 47% gain on earnings for 2023. Bit expensive at 152, but apparently their product is very highly thought of, and we established a position in that today. So bottom line for today, tight range, back inside the flag, waiting CPI data in the morning. Not a positive what's happened in the last 2 days on the indexes, especially the big cap indexes, but no major red flags now, but those flags could be waving if we get a negative reaction to earnings tomorrow. On the other hand, if we take off to the upside because it looks like inflation, I said earnings, I meant inflation. Depending on the reaction to the inflation data, we can very easily take off our SQQQ hedge and participate in the upside. So that's what we're looking at for tomorrow morning and through the day tomorrow. So that's going to wrap it. As always, love to hear from you. You can email me, don@revereasset.com, or phone 855-REAL-WEALTH. Wrapping up Tuesday, August 9th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.